let's talk about Coinmetro, and let's talk about how when I say that the crypto doesn't build the community builds the crypto, but what builds the community is trust. And I tell you by the end of this 3-part mini series that most likely Coinmetro will be the only crypto exchange you use moving forward. It'll be because Kevin earns your trust in this video. And I promise if you guys stick around to the end of it, you guys will get a $10 sign up bonus and some other goodies. Maybe we'll be doing some other giveaways down the road. So I appreciate you. Definitely hit that like button, swing over to Coinmetro. Let's dive deep. What's up, Kevin? Welcome to the show, man. It's an honor to have you, buddy.
Thanks, man. Thanks a lot for the invite. Really, well, I guess the invite's probably been there for a while, but I'm glad we finally got it.
Glad to have you on the show, man. So if you're down with it, let's start to hear about a little bit. I'd love to hear your story, man. I'd love to hear can you tell me what it was like the first day that you decided to start Coinmetro? What were you doing? What was it like? I mean...
Yeah. It was a dark and stormy night. So I, previous to crypto, I was in FX. So my FX journey kind of led up to my crypto journey, because in many ways, if you look at how crypto is traded, even the types of charting that's used, everything, even the way the pairs work, right? It looks like FX in many ways. Mm-hmm. So back my FX days, I was an FX trader. I managed money for some people. I managed relationships with different brokerages. At some point, I figured I might as well open my own. And back in 2009, I did that. I opened a regulated FX brokerage. And that journey was very similar to what the journey was after that into Coinmetro or into crypto. And that was simply, I was upset that brokers, sucked, basically. I wouldn't necessarily say I was a professional trader, because I'm not even sure what that means. But I wasn't a retail trader, right? I knew what I was doing. I made money doing it. I managed money for other people, et cetera, et cetera.
Yep.
But I still wasn't big enough to go trade, directly with some non-retail entity. I still had to have accounts at retail brokers.
Yep.
And they're horrible. Service sucks, pricing sucks, technology sucks, the whole nine.
Yep.
And so that led me to open my own brokerage. From there, fast forward a few years, I got a lot of people asking about, hey man, how can we trade Bitcoin? And at that time, I had personally been involved in crypto since like 2009. Somebody sent me the white paper. I think it was an MMS message, if anybody's old enough to remember what those are. And I literally got like guy probably paid like $16 to send me, the Bitcoin white paper by MMS. And I read through it and I thought, I thought of securities, to be honest. I didn't think of currencies. I didn't think of, trading necessarily. I thought, wow, imagine if you could buy securities and settle almost instantaneously around the world for a negligible amount of money. That's what I thought about. But anyway, so people asked me if they could trade Bitcoin. I tried to find liquidity. It didn't exist. If I recall correctly, there were two exchanges that had REST APIs, and that was Bitstamp and I think Huobi at the time. It was 2014, maybe 13. And well, pricing was horrible. The difference between each tick, like every time the price changed, the actual difference in the price change was massive. There was no way to offset risk. There was no way to hedge. It was just not going to happen. And so the journey, Coinmetro kind of started there. But funny enough, Coinmetro was going to be a mining platform initially. I actually had a domain that was miningco.in, so like mining coin. I think I still own it. If I don't, somebody should jump on it, because I just gave it a So I bought the domain, and the idea was we were going to create this automated facility where people could, mine with, $10, $20, 30 euros, 50 euros, 10 pounds, whatever. And well, that never happened, but that was the lead up to Coinmetro. And at some point I looked around the market and I thought, well, the same problems that existed in FX, and I would say almost still exist in FX, existed in crypto and still exist in crypto. Like there's a lot of exchanges, but most of them are horrible.
Yep.
And there's a lot of offers out there, but most of them are, nonsense. They're just not real. And that includes the listings, that includes, the exchanges themselves. Support is terrible. And the retail crowd always gets screwed. And not just in, trading, banking, anything that has to do with finance in general. The retail guy, the normal person, always gets the worst possible deal ever. And so carrying over kind of that mantra, that was the idea to push Coinmetro. That was the idea to go from kind of initially just providing, I guess, aggregated liquidity, because that didn't exist at the time. I would say almost it still doesn't exist.
Yeah.
But from knowing what I knew then, that there was no liquidity in the market for a brokerage to be able to offer crypto, kind of the first idea was, well, let's aggregate some liquidity and sell it to brokerages. But the more I got down that rabbit hole, the more I figured out that, well, retail people need help. They need a place that they can come and see some transparency, hopefully, have a bit of honesty and a bit of openness and, all these things that just don't exist. So I can tell you the day that it happened, there's an AMA on the YouTube channel from 2017. I was in the maid's room of my apartment in Mexico. And I'm pretty sure that one day, because that was my office in my house in Mexico, it was the old, what would have been a maid's room. I didn't have maids, so that was my office. Yep. And it was this little tiny, 4 foot by 3 foot, no window cave, kind of in like the, corner of the house. Yep. Which was great because I couldn't see the sun come up or go down. So I would just sit in there and work all day and not realize what time it was. There was no clocks in the office, nothing. I even had the part of the computer where the clock was, or the monitor, I had a piece of electrical tape on it, so I couldn't see it. So it was like being in a casino, man. You just go in there, you lose all your money, and then you leave at the end of the day. That's how it worked. So yeah, it was just a day. I was talking on the phone with the CEO of a Forex brokerage. I won't name the brokerage, but decent sized one, still exists, bigger than they were then. And the dude was trying to pitch me aggregation technology and liquidity that he knew that I knew that everyone else also sells. And he knew that I knew I already had, but he was still trying to sell it to me. And it just kind of clicked in my head that I'm in kind of the wrong industry. And previous to that, I had been to a few Bitcoin meetups in Mexico, actually, and one in the US. And the cool thing about that, well, the one non-cool thing was I showed up, wasn't as bald as I am now, but I was still bald. And I had a blazer on. I probably had a t-shirt, but I had a blazer on. And I was, bald dude, at least approaching 40, I guess, at that point. And everybody else in the room had like man buns, tattoos, all this stuff. And then when I first walked in, I was like, maybe I'm in the wrong place, but immediately kind of felt this thing where even people that were building competitive product or competing products actually wanted the other guy to succeed, because they wanted the whole market to succeed. There was this idea that if we all don't do something, good here, it's not going to work. And I thought that was amazing because FX is completely the opposite. Nobody cares if you even the guy selling you liquidity kind of wants you to fail. It's a much different dynamic. So that day that clicked. I was in the office and I was like, screw it, I'm gonna open an exchange. And that was sometime, and at first I was actually gonna bootstrap it. And then, I started doing some research and saw all these ICOs. And for all the bad stuff you can say about ICOs, I would still say they're one of the most innovative things that's ever happened in crypto. And the reason for it is that previous to that, when you had a business, you needed to raise money. Okay, if you wanted to raise 100 million or, whatever, that's actually easier because there's people that'll help you do it because they're going to take a percentage of it. Yep. When you have to raise 1 million or 5 million or 10 million, it's pretty difficult because no one wants to help you do that because the guys that usually take on, deals to distribute deals are distributing deals of 100 million. So they're going to make, 1 to 2.5%. So yeah, the difference in price, every price tick. So basically every time price changed, the actual difference, the percentage difference between one price and another was massive. And at the time, the FX broker I was running was a straight through processing broker. And that simply means we're not a market maker. We don't take on risk. So that means we have to hedge or offset the risk on every trade, or we just send the trade to someone else for execution at best price. And I couldn't do that with Bitcoin pricing because, well, all the prices were horrible. And the price change between every time the price changed, the difference in price didn't allow me to hedge it either. Because I didn't know how much the price was going to change. It could be up to 1%, could be 0.5%, could have been 0.02%. It was wild. So that's why that at that point my initial idea was, well, I'm not the only one in this position, right? There's going to be other brokerages out there that want to offer Bitcoin, FX brokerages, stock brokerages, whatever, and they can't. And at that point, they couldn't for other reasons, probably, regulation being one of them. Mm-hmm. But there were still going to be brokers out there that were in the same position, and eventually there's going to be more. So the idea first in my mind was, let's aggregate some liquidity. But I'm still a retail guy at heart. I feel the pain of those people that go out and try to get a good deal, and they can't. And then I know how easy it is sometimes for the people that have the money. They have, the right number of zeros in their bank account. They have the right connection. They know who to talk to. They have a friend of a friend of a friend who works, wherever. And the world shouldn't exist that way. In fact, it should be almost completely the opposite. Because there's many more people around the world that don't have all those zeros on their bank account. But for some reason, most businesses in finance, because it's easier, tend to focus on, the 1%, because the 1% is easy. There's only 1% of the world that you have to deal with, yep. Maximum. Whereas on the other side, you got to deal with 99, and sometimes it's not easy, So, but I've always been a retail guy. So the kind of game plan shifted from, okay, I could aggregate liquidity, But then I'm just kind of helping the same people that are the reason I'm leaving FX. So I'm helping that same small community. And so the idea for Coinmetro kind of was born out of there. And I said, yeah, I'm gonna, actually the name, funny enough, my FX brokerage was named FX Pig. And most people thought that, well, it was probably an acronym at first, and then, it just happened to be Pig. And that's actually not true. I actually came up with Pig first. Why? Because, well, all brokerages are pigs, to be honest. They all are in it for themselves. It's like a casino. They kind of want you to lose for the most part. And then I came up with the acronym because I figured when I went to go sell FX Pig, I better have a good reason why it's called FX Pig, other than the fact that all brokers are pigs, especially when I have to go talk to the brokerages. So I came up with, the initial one was Premier Interchange Gateway, was my FX brokerage. When I came to name Coinmetro, I was trying to think of two words, one that kind of took traditional finance and the other one that had some idea of either of speed, being kind of on time, something that's very structured.
Yep.
And actually, metro in my mind meant metropolis, not necessarily a train. But then the first time I went to our, which we don't have a train anymore in the design. Some people would say, thank God. Others would say they miss it. I don't know. I'm not going to say what I think, because then I'm just, then the whole thing will get, shifted to one side. But so the first designers I gave the job to put a train in it. And I thought, yeah, all right. Cool. Yeah. Metro. So yeah, that was, I think the journey there, hadn't I been in FX initially, I probably I would still be in crypto personally. I would still probably be out of FX, but I'm not sure I'd be sitting in the office of Coinmetro. I think the journey that I had through FX kind of led me to crypto in many ways.
Wow. And how hard was it did you fund the whole thing yourself? You said you left off somewhere, you went to bootstrap it, but then you realized.
Yeah. So I the idea was to bootstrap initially, and that was, I and my other majority shareholder, we bootstrapped essentially creating an ICO platform to run an ICO. Initially, the idea was to bootstrap, let's say, the entire initial offering. But then I started to do some research and I saw these ICOs. And regardless of what people say about ICOs, and people will say they were mostly scams, et cetera, I think most people don't really connect the dots that most businesses fail. So most ICOs weren't scams, they just were failed businesses. Mm-hmm. But to me, the idea of ICO, or the ability to raise capital, is still the biggest innovation that's happened in crypto since, the Bitcoin white paper. And the reason is if you have to raise 100 million or 200 million, it's actually easier. As long as you have the business to back it up and a good pitch deck, et cetera. But you can get people that'll help you raise that money. In fact, in many ways, if the idea is good, there'll be people lined up to raise money for you, because they're going to take 1 to 2.5% in the traditional market. So if it's 100 million, they're going to make 1 to 2.5 million for a few phone calls, and they're okay to do that. But when you have to raise 10 million or 5 million or 1 million, there's nobody that wants to help you raise that money, because they're going to do the same amount of work, make the same amount of phone calls, do the same amount of deals, make way less money. So they're not going to do it. And so again, traditional finance is built in this way that it supports the heavy hitters and doesn't support anybody that doesn't want to raise, 100 million or 200 million or $1 billion or whatever. So ICO was amazing. When I saw that, I thought, well, I'd be stupid not to use this ICO methodology. Regardless if you have the money or not, there's an old saying in business, and it might sound a little crude to like nobody that's ever been in business, but if you're going to do a business and you're going to put your time and effort, blood, sweat, and tears into it, don't also put your money into it. Mm-hmm. Because there's two types of risk, right? You're risking your time, your reputation, your energy, etc. If you also risk the money and it doesn't work out, well, you're in a pretty bad spot. Whereas you can just risk the money or just risk the time, but never do both. If you don't, never do both if you don't have to. And so I still put up about $250,000 of my own money to get us rolling, and so did our other majority shareholder. And that got us. We actually built a platform to run the ICO. We didn't just put an Ether address on a screen, which is what most people were doing at the time. We actually built a platform that KYC'd people and et cetera, and it was like a cashier, almost like it actually was a platform. So yeah, it was bootstrapped in order to raise more capital to really, kind of try to reach our goal.
And how was that did you guys have to pull licenses and stuff like that to do that legally, or did you guys launch outside of the USA at first, or how did that go?
Well, we set up all the controls we possibly could to not take US residents. Some still snuck in, because that's just the way it works. To be honest, so we did get some US residents, which later on we had to go and apply for some exemptions, and we did what we had to do to remain compliant.
Yep.
At the end, a lot of people are scared about, legislation and regulation, or they're either fearful or they're scared of it, or they don't respect it. There's some, even now in crypto, that still exists. And the fact is, what I always say, we are very compliant, and we've always tried to do things as compliant as we can be, but you're still a business. So there is always this gray area of, I want to be compliant, but I'm going to be compliant this way, because if I do it exactly as I think the legislators want me to interpret it, I'm gonna go out of business. And there's always a bit of, you try to stay within that gray area. You don't go into the black area, you don't go into the white, you stay somewhere in the gray, you remain compliant. And that's kind of, and as more regulation comes out, that's what you have to do as a business, right? You have to. But we've always been on the side of compliance. And that doesn't mean I like regulation or really love legislators, because they don't. In fact, they make a lot of mistakes. Legislators write laws that make no sense. Mm-hmm. And then regulators try to enforce laws that make no sense. But it's so much easier to change a system from the inside than the outside. So when you're on the outside trying to fight, you have to fight everybody, right? Mm-hmm. When you're on the inside, you got to change one person's mind, and they'll do the fight for you. So we've always been kind of trying to be on the inside of that debate rather than the outside. And so far, it's been good for us. Whereas when you look at companies that have always been on the outside of that debate, well, some of them don't exist anymore. Many of them don't. Mm-hmm. And the ones that still do exist have, issues. You see them in the news, and you see them in CoinDesk, and you see them in whatever about regulators, banning them in certain countries, or them not being able to do business or have certain fiat on and off ramps, or, whatever. And that's because, to fight from the outside, even if you're right, is difficult. Absolutely difficult, comparatively speaking, to fighting from the inside.
That's great. That's a great explanation. Do you think that the day will ever come where exchanges stop accepting fiat because of irresponsible fiscal monetary policy? And I would say that the USA maybe be in a little bit of different position, but what about other exchanges that operate in less legit countries, I should say, that their government could be legit just printing fake rupees out of thin air and buying crypto? Will there a point that, or how would we stop that? Like, would that ever be something that could devastate this industry?
Well, I think, I like to say that everything in life is a game. And the more you get involved in the game, the more you realize how to play the game. And fiat currency, even when it was backed by gold, to be very honest, has always been a game. Mm-hmm. And there's always been a small amount of people controlling that game. And for everybody that talks about the debt, especially in the US, the exploding debt, how that somehow is going to destroy the dollar, to be honest, debt by itself will not destroy the dollar. Why? Because the taxes from everybody in the US pays the interest on the debt. And even now, the 7% that's taken out of your taxes to pay that debt pays off the interest on that debt without any problem. In fact, there's even a surplus. So the debt can actually grow massively, and all it does really is have a psychological effect on the market. It won't be the end of the dollar because of debt. There are many other reasons the dollar will eventually kind of lose its empirical hold over the world. And we're seeing some of that happen. We've seen it happen over the last 20 years. You've seen people start to price and buy oil, and whether it be the Chinese currency, whether it now be in Bitcoin, as Russia mentioned. And so a much broader effect on the dollar. The reason why the dollar is still kind of the mainstay is, one, it's still the most stable government. It still has one of the biggest armies. It still is able to hold a lot of control over the world. And that means that the currency is going to be relatively stable. And that also means that in times of crisis, people buy dollars. It also means that almost every commodity transaction, almost every time someone buys or sells any large amount of goods, they're priced in US dollars, no matter what country. Mm-hmm. So those things take a long time to unravel. They will unravel, right? Historically, I think fiat empires lasted about 100 years. We're already into about 120, 130 years of the US dollar empire. But we're also in a much more modern, let's say modern fiat warfare, comparatively speaking to what it was, 100 years ago. So that's eventually going to end. But I don't think, to be very honest, in my lifetime, another 30, 40 years, that it will end. It will gradually, however, taper off. I think the advent of CBDCs they're still fiat, right? I mean, it's not that changes the game. They're still fiat currencies. But if we are able as an industry to maintain, Bitcoin, maintain Ether, the big boys, the majors, as an option. So you have this option of having this, privately issued currency versus this currency issued by a government or a public currency. If that option still exists, and us as an industry are kind of well poised to make that happen. But if we're able to do it, then at the end of the day, that will start to change the game, so to speak. And historically, people have never been able to change the game. When it comes to higher finance and kind of changing the game only happens, like I said, from the inside. And the inside are just powerful people. And so if you weren't a powerful person, you're not going to change the game. But we collectively now are starting to change the game. And what the only reason for that, to be honest, is decentralization. And I'm a centralized exchange, but I can say that without any issue, because no matter what you do in crypto, some form of what you're doing is decentralized. You're either dealing with decentralized assets or you're performing some type of decentralized service. If it wasn't for the decentralized aspect of crypto in general, it wouldn't be here. I guarantee you that. I mean, there was multiple internet currencies before Bitcoin. Flues, if anybody remembers Flues back in the day, eGold,
Yep,
eBullion, all these things.
There was these things were something too, or something, wasn't there? Something.
There was bit something. Yeah. There definitely was a. I'll think about it. Maybe I'll remember it throughout the show. But
yep.
there were multiple centralized digital currencies that were amazing, that had some of the same aspects as Bitcoin. In fact, eGold was literally digital gold. So those that think Bitcoin is digital gold, eGold was literally digital gold backed by golden storage. And you could move it instantaneously, almost free across the world to anybody with an anonymous wallet. Well, eGold was made by a doctor in Florida, and he went to jail. The FBI arrested him. He went to jail for, I don't remember how many years. Had he been arrested now, he'd probably go to jail for the rest of his life. So he's kind of lucky on that standpoint. But and eGold was great. In fact, it did many things Bitcoin can't. It was fast. You could do, I don't know how many transactions. I remember the throughput was obviously more than Bitcoin. Mm-hmm. But what it didn't have was decentralization. So that key piece of what we're all trying to do here is probably going to be how normal people collectively change the game. And the thing is that fiat, literally has no value. Yes, that's true. It's not backed by anything. But to be honest, when it's backed by gold, what's the difference? To be honest, I'm from a high level. There's really no difference. And so that is not going to change. And I don't think we're going to see the fall of like these empirical empires, fast. But all these things that are happening around the world are catalysts for people to realize how the game works. If everybody knew that the Fed, the central bank system and the Fed in the US was a private entity,
mm-hmm. Yep.
They knew it wasn't government controlled, it's actually privately controlled. Mm-hmm. If they understood how that game works with inflation versus deflation versus interest rates, how simplistic, but at the same time, how geared toward, again, the 1% that system is, mm-hmm. they would revolt more against that system. And how they would revolt against that system would be going into more decentralized systems like Bitcoin. In 20 years, we might have another decentralized system that, maybe it could, there is a future where Bitcoin will probably still exist, but might not be what it is now. We may have something else. I don't know what it would be called.
Yep.
But the progression into decentralization is what's going to help change the game. Absolutely.
And so say like on a global scale today, there is $10 trillion in fiat currency, or $50 trillion globally on a global scale. And we know that no government is backing fiat by anything, right? Like if they are printing more money, at this point in the game, they are printing it with no end in sight. Just it's going to rinse and repeat. So say if we have $10 million on a global scale, wouldn't it almost be smart to say as a crypto exchanges on a global scale that when fiat currency enters the crypto space and hits $10 trillion, we are no longer accepting fiat. You guys can print all the fiat around the world you want, but as a group, as a community, our cap in the crypto space is 10 billion, and we're not going to let any other fiat in. Would it not seem like smart to go some point like that where we have to say, hey, like United States, what's stopping Biden from literally printing himself $1 billion worth of US dollars and going and buying Bitcoin with it?
But I think there's two scenarios that have a potential to happen. Well, one is inevitable. When it happens is a question. And that's the scenario you're talking about.
Yep.
So the reason why fiat is still accepted on crypto exchanges and the reason why it's still a valuable service to have on a crypto exchange is most people have fiat currency. Mm-hmm. Most people aren't already in crypto. And those that are already in crypto eventually need to cash out to fiat because they have to do something that they can't do with crypto as the industry grows. And I would argue that we really don't have a cryptocurrency yet. And the reason for that is that the basic definition of a currency is wide accepted and stable pricing. And I don't see that in crypto yet. I think we're going to get there. And obviously CBDCs, you can argue, I wouldn't argue they're crypto. Some people might try to make that argument, but they're digital, at least, digital currency. But we eventually will have some form of crypto asset that is more like a currency. I mean, you could even, I guess, with UST, for example, like Terra, they're trying to back it by Bitcoin, etc. That at some point could become a stable coin, which is not actually tied to fiat, which is programmatic, which potentially could be stable and be a currency, right? But it still has to be widely accepted. It still has to meet that definition to be a currency. So let's say we get to that day, right? We're on that day, and yes, the market's much bigger. There are many more people that are coming in and out of some type of cryptocurrency. Then yes, first of all, from a regulatory angle, well, regulations will probably change after that. But let's say that happened today, well, the regulatory side around taking fiat is so much more difficult to comply with than the regulatory side of just dealing with crypto. So me as a centralized exchange would get rid of fiat in an instant if I could do that. You have to assume over time that the regulatory landscape is going to look pretty similar. So maybe that argument goes away in 2, 3, 4, 5, 10 years, whatever. But still, it still means easier operational fluidity if I can use all digital currencies or all digital assets and move them near instantaneously with very little cost versus having to deal with a banking partner, which is also quite a pain in the ass in most cases, right? Now, that's not going to change. Banks will be a pain in the ass until there are no more banks. That's always going to be that way. So yes, as for operational fluidity alone, that will probably happen. The other side of the coin is, there's already, I can't name you what country it is. Well, probably Venezuela, El Salvador would be an easy one, but there are definitely countries that are stockpiling BTC for the express written idea to back a CBDC with Bitcoin. I guarantee you. So what Terra's doing now, I don't think Terra's doing that because they had this bright idea one day and then the next day started to do it. I think they had an idea, which a lot of people have had. And I guarantee you they've talked to governments about this. I guarantee you. And there's already governments doing it. China's going to do it, almost guaranteed. Russia's absolutely going to do it because they're not going to have much of a choice. El Salvador's already started to do it. They're already starting to hoard Bitcoin. Even the US hasn't been buying Bitcoin, but they've been seizing it. So they also have Bitcoin stockpiles. Yeah. And what better way to back a digital currency than with the biggest, most liquid digital currency? It's kind of a no-brainer. So I do expect that to happen. Now, how far away we are from that happening, and obviously the US won't be the first one to do it. Yeah. That's for sure. But it's going to happen. It's going to happen as long as Bitcoin maintains a liquidity dominance in the market. It will be where most people, businesses, and even governments go to hold liquidity. So yeah, absolutely. And the more liquidity that's there, the more stable the price is. The more stable the price is, the more it does become a store of value. You can argue it's a store of value now. To be honest, it's a shitty argument. And it's a shitty argument because a store of value should be stable and it shouldn't be as volatile. And Bitcoin, even if you look at charts now, look at Bitcoin from 2009, 10, 11, 12, 13, look at it now. Yes, it's worth much more money, but it's also less volatile. Our peaks and troughs aren't 83% anymore. Now we've seen peaks and troughs about 40, 45, 50%. Yep. And that's still pretty volatile, but it's better than 83. And the more institutional money that flows in, the more people use it, the less volatility you're going to see, which has a negative effect as well, because as there's less volatility, there's going to be less retail money in Bitcoin because retail people like volatility. Mm-hmm. And so eventually Bitcoin is, unfortunately, in some ways going to be a 1% thing, but it will lead to a more cleaner, transparent financial system, which is good for the 99% as well.
What is your opinion? Because it's nice that I get to talk to somebody that's not associated with a project, man. I can't wrap my head around when you start understanding like the blockchain technology from first principles and you start to study something like Kadena and you really learn what they're putting together. And it's really, I don't even know how to explain how impressive what they've accomplished, or I guess we need to see CADX turn on first, but what could potentially could have. And it seems so odd that just even the biggest influencers in this space are just acting like Kadena's, might be a cool thing. Like it might. And it just blows my mind that everybody, you would think even like Coinbase would be like, that's what we've all been working to build for so long. We got it. Like, how do we give you support, Kadena? But to me, it's looking like everybody really realizes what Kadena, I guess, could potentially do to the rest of the industry. Maybe some other projects may or may not be relevant anymore. There's no real use case for them. It's almost like they're trying, it's like everybody's working against Kadena is the way I feel like it. And it just, I don't understand why you would think everybody would be trying to hand over fist, give Kadena support in that, like you guys are.
Yeah, I think there's an element of, there's always this idea when there's a new idea, like some nuanced idea or someone solves a problem that the kind of the world's working against. But I think I look at it another way. I don't necessarily think the people are working against influencers, are in many ways most of them are a dime a dozen. meaning that it's not that they have a large amount of knowledge. Most of them don't necessarily research anything. They just go where the hype and FOMO is, because that's what's going to raise their bag so they can cash out and, buy a mansion in Miami, right? So, and that's one thing that doesn't happen in other markets because of regulation. It's one reason why everybody should kind of embrace regulation a little bit, because regulation would curtail even like your Elon Musk comments, where, those things a lot of times don't help the market. It's kind of just Elon Musk has a bad day, wakes up with like a cramp in his leg and decides to crash Bitcoin because, why not? And so, I think that aspect of it is kind of understandable in that Kadena is pretty complex. I mean, if you really dig into it, there's a lot of things going on there. There's a lot of things you need to understand to even see the potential. And they're not going to go that deep. So, whatever. But we don't need them, to be honest. I don't think Kadena needs them in any way, shape, or form. Also, there's kind of this idea, most people, when they see success of a business, of a person, whatever, they see it as overnight success. Because I don't see everything that happens, behind this, the 10 years, the 20 years in the lead up. They don't see that. What they see is, yesterday this business or this person was unknown, and today they're huge. Oh, how lucky they are. They got lucky, overnight success. Even things like, remember those GoPro cameras, right? That dude was trying to sell GoPro cameras for 10 years before he made any money, right? But Amazon was unprofitable for 17 years before they made any money. And of course, in crypto, those time spans are a lot shorter usually, because we're now in this world where information moves so fast. There's eager people waiting, all over the world to get involved in stuff. I think Kadena kind of is doing many things the right way. They're building without really caring about that hype or that FOMO yet. But that hype and FOMO is going to come. It's going to come because simply they just do things better than other platforms. But at the same time, I don't think, Ethereum is Ethereum, right? This idea of an ETH killer, I hate to say it, but if you look at anything in tech, so if you think about what crypto is, right, from a high level again, it's everything most people don't understand about tech combined with what most people don't understand about finance, and all raveled into one. And so what normally happens in tech and in finance when there's a nuanced product is that, the only people that use the product first are like criminals. Like they use it for bad things, right? This is not even think about any credit cards, checks, all these things. When they first come out, they get nailed by criminals. Bitcoin, same thing. Silk Road, right? Mostly criminal activity. And then eventually the world kind of adapts, and the world adapts, and the world adapts. But once there's a kingpin, it's pretty hard to get rid of the kingpin. I mean, because people just get used to it and people complain about it. Look at banks. I don't know anybody that has a bank that goes, I love my bank. Every time I call them, it's amazing. I send them flowers, once a year because they're so great. Nobody does that. Yeah. Right. But they don't leave the bank because they're used to it. And they have this idea that they need it. I need my bank. Well, no, you don't. You could go to another bank, first of all, or you could just not use a bank. It's actually possible, but people think they need it. So Ethereum's probably always going to be the big dog in the room. They're going to lose market share, so they won't own 60% of the smart contract market or whatever, 80 or 90, whatever it is. They might own 30, but the next runner-up might only own 12. But the market will be 1,000 times bigger, right? So I think and I think Kadena's positioning themselves quite well in a niche. And I think the niche they're positioning themselves in a lot because of the backgrounds of people on the team is going to be finance. Where Ethereum, people have done bonds on Ethereum, and there's been some financial operations on Ethereum, like institutional operations. But from a retail finance perspective, gas is expensive, right? Now the gas, everybody talks about gas, but if you're JP Morgan and you have to move $1 billion, would you care if it was $3K, $5K in gas fees if you knew it was going to get there and the system was tested for 20 years at that point, or whatever, and works? No, you wouldn't. You'd pay the 10K with a smile on your face and move your billion, right? But for retail guys, again, and smaller transactions, Ethereum will lose at the end of the day. No matter what they do with ETH 2.0 and what they do with sharding, they are going to lose. And Kadena is priming themselves to pick up the slack. And they're picking up the slack in a decentralized way that's scalable, which things like Solana, et cetera, can't compete with. So eventually the FOMO will hit. And the FOMO will hit, again, when people understand the game. But it takes a while for people to understand the game. But they will understand it. They will get there. And I think, to me, Kadena is a minimum 3-digit asset, coming up. And even this year, regardless of what happens this year, regardless of what the global political, economic world looks like, it has the potential. If you look at something like, not in terms of project or business, but in terms of price action, look at Quant. Look at what Quant did from like €3 to 8, plateaued at like 20 or 30, came back around 8, stayed there for a while, 400 within a couple months. That's the price action I expect. Similar price action, maybe not similar numbers, maybe not exact numbers, but similar price action, because again, quant's kind of the same thing. A lot of people slept on quant, and quant doesn't do anywhere near what Kadena can do.
Right. What do you think about gaming projects? I think that'll be a big, like if you built something on Cardano right now and gas is 50 cents per transaction, if you are a degenerate like myself who likes to, go into these wild APYs and, throw a couple bar tabs at it and have some fun, you got to compound 3 times a day. So if the average person's holding 20 assets in their crypto portfolio and they want to stake it in DeFi and compound 20 assets 3 times a day, that's 60 transactions, comes out to about, on Cardano, I calculated it was like 11 or 12,000 for 30 days versus something on Solana, which is $29. So what is your thoughts on any ecosystem that charges over 1 penny for gas? Really, because I could build the same game on Solana and play it for a few pennies, or I could build it on Cardano and pay it for really expensive to somebody that's living paycheck to paycheck, So do you think a lot of gaming will be moving to ecosystems that only charge a penny?
I think we will have protocol wars. I think we're already somewhat in like a protocol war now, even though it might not be so visual yet. And that protocol war is going to decide, because if you think about, tech in general, usually you end up having kind of the company that, for instance, you had way back in the day, VHS versus Beta, the Beta? No, what was the name of the thing? VHF and Jesus, I don't know why I can't remember. Anyway, everybody knows there was two, let's say there were 2 different types of tapes that you could use. And VHS won, not because it was better. It actually had worse quality. It actually was bigger, more bulkier. But for whatever reason, that became the kind of standard. And then we went to like HD DVD versus Blu-ray, and Blu-ray won. Why? I don't know. Blu-ray had less space. You couldn't hold as much on it, but for some reason it won, probably because it was supported by Sony and whoever else. But at the end of the day, exactly. Blu-ray sounds much better than HD DVD. And so that's one aspect. The other aspect is from the finance side, it's very similar, right? If you look at like databases and even databases in finance, there's no standard, right? There are databases that are used by large corporations, large businesses in finance, outside of finance, but there isn't one. There's lots of them. And people choose what they want to use. And so I think these protocol wars are going to start to segment, and you're right. And just like we talked about in the last question, you have your retail segment, whether that be retail finance or gaming or e-commerce or whatever, low value transactions. And when you have low value transactions that are high frequency, you're not going to pay $1,000 for gas. Right. No. I mean, you're just not. Right. It's not, regardless if you can, you're not. It's just stupid.
Right.
And so you are going to find the platform that suits your need. And then you're going to have the battle between cheap platforms. So you'll have a just decentralized platform with low TPS, like transactions per second. You'll have a decentralized platform with high TPS. You'll have a centralized platform with high TPS, etc. And then based on what you're doing, with gaming, you're right. Solana may take a big chunk out of there. Solana is somewhat very centralized, comparatively speaking to other protocols. However, does a gamer really really care?
Nope.
If they're going to move something for a penny? No, of course they don't care. Now, the guy that cares about that stuff, and probably that's going to be in finance, especially for retail people in finance who don't necessarily want a centralized entity to know what they're doing, or at least everything that they're doing.
Yep.
They're going to opt for another protocol that's probably decentralized and that probably has the highest transactions per second they can find, and also keeps the cost down. And again, that's kind of like Kadena's niche, right? Kadena's niche is I like decentralization. I want something decentralized. I need high transaction. I need to be able to move stuff fast. Throughput needs to be good, but I don't want to pay an arm and a leg for it. Kadena. Again, I'm a gamer. Yeah, maybe Solana. Or, I'm JP Morgan. I need to move 100 billion, but I need to absolutely know it's not going to get lost.
Ethereum.
Well, by then Ethereum might be 10, 12, 15 years old. It's true and tested. It might cost 10K to move the money, but they don't care. They'll pay the 10K, no problem. And so I think that's what we're starting to see, that people don't realize that yet. They think it's there has to be one Ethereum killer. Like, Ethereum's going to die and one thing's going to take its place. No way. There are going to be multiple protocols, and Kadena will be one of them. Solana will be one of them. Ethereum will still be one of them.
Yeah,
for sure.
So you think that? Can you explain what KYC is for anybody that's new who doesn't understand what KYC is, and why are people? I call it racism, segregation, right? You're telling me I can't partake in a fair launch of a project based off my geographical location, right? Why are we segregating people from the USA from buying coins That's the part I can't understand.
It's complex, and in many ways it doesn't make any sense. And I guess I'll start with, so KYC, know your client. What it means is I need to know everyone I do business with. It's not just my clients, actually, my employees, my suppliers, my liquidity providers. I need to know who I'm doing business with so that if something happens, I can help kind of find the culprits. And that's how kind of both police and regulators, legislators, they all work together when something happens. So, you get your money stolen on Coinmetro, we're going to be able to somehow figure out who did it, hopefully, right? And that's because of all this data. So from that level, I think most people would agree that that building up this kind of collective security using data is not a bad thing. Now, like most things on paper, you could say like democracy, even communism on paper sounds amazing. KYC and due diligence sounds amazing on paper, but the application of it can be hard to do, dynamic, and sometimes make no sense. So yeah, our goal as a company is to service everyone. We get into issues with countries like Venezuela, with countries like Iran, with countries obviously like North Korea, for example, with countries like Russia now, where the populace is given the fault of a government, and then we're told by the governments that we can't do business in that country anymore. And in the old financial ecosystem, the whole idea here, and you can see this playing out in Russia right now. Yeah. The whole idea is you have someone, a strong, let's say we'll give the example of Putin. You have Putin who's doing things that the world doesn't like, and the world wants to stop. And there's limited ways to do that without just going to full on war, right? Which most people don't want to do. So what you try to do is get the populace of that country to get so pissed off at their government that they overthrow their own government. Yeah. The way to do that is you start to restrict access to things that they had before and blame, Putin in this case. Mm-hmm. Now, those things work, but they take 30, 40, 50 years to work usually. Like it doesn't happen overnight, right? Mm-hmm. And all these kind of rules were put in place a long time ago when we didn't have all the systems we have now. The internet really didn't exist. Obviously cryptocurrency didn't exist. And so unfortunately they take a long time to change. But the problem is that, when we go through this even in Coinmetro, I'll give you a clear example. We find fraud in our system. So we find someone that's using stolen credit cards, stealing people's money and depositing it to Coinmetro, buy Bitcoin, to take it off the system, right? We want to stop that because there's an infinite amount of victims behind there that we want to help not get their money stolen off their credit card. Yeah. Now we find a pattern. We take that pattern, we create an automated system to find that pattern. And when we find someone doing the same thing, we restrict them. Now, obviously we're going to catch some innocent people in that pattern. But then you have to think, first of all, the pattern is going to start out being dumb because we don't really understand what's happening. So we create kind of a dumb rule to catch people. Then that rule gets more complex over time and catches less innocent people and more actual criminals. Yeah. But you're never going to make it perfect. So you're kind of between this of protecting people and hurting a small amount, or not doing anything and hurting a lot of people. And that's the hard part. So for instance, Russia, we haven't restricted access to Russian clients yet. We have restricted to sanctioned Russian clients. But there's a lot of pressure from our banking partners, from regulators to restrict all Russian citizens. I think that's crazy. But at some point, if we don't do, let's say we're pressured enough to do it and we don't, they will just put us out of business. So we will put all of our other clients at risk. Yeah. We will put all of our potential clients at risk. So you have to make a decision at some point. So it's difficult. It's like, you got to make tough decisions sometimes, and it's unfair. And my goal from the inside is to make it fair. My goal until the day I die is to make finance fair. And I think, in the last 10 years collectively, we've done a bit of that. Crypto's done a bit of that. It is better than it was. And yeah, US citizens is one of the most ridiculous things. This idea of if you have more money, you're better with your money. But that's ridiculous, right? There's a lot of smart people with not a lot of money. And there's a lot of people with money that are not smart at all. Mm-hmm. And so, but again, antiquated systems. The only way to change those, unfortunately, is from the inside. And they have changed a bit. Actually, the SEC added in this, if you're educated in finance, then you don't need to have the money. Well, that's a small step in the right direction, but it is a step in the right direction. So, I think this whole movement, and the more and more people that get involved in this movement, the easier it is going to be to make more changes like that. And hopefully at some point we do create an ecosystem where everybody can participate. We're not there yet, but we're getting there.
So what is the purpose of stopping the USA people from buying? Is that something that you guys would get in trouble if you let USA people buy?
Correct. Yeah, so the SEC, when it comes to fundraising or certain types of investments, almost all types of investments, have most regulated countries. The UK does the same thing. The US does it. Australia does it. Japan does it. The difference is the US actually goes after people that violate this law. That's the only real difference, to be honest. Many countries have similar laws. The law is in place, what they thought was for good reason, because what they would see is, for example, you have a lot of properties in crypto, a lot of assets that come out and do rug pulls. And once you become educated in crypto, you can spot those from a mile away. The Will Smith coin, right? That's going to be a rug pull, guaranteed, right? There's no way it won't be. It's going to happen. It's only a matter of when. So, but people don't know that. So they put their life savings into these things and then they lose it. And the same people that say, I wish there was no regulation because I would have more freedom, are the first people to go and complain to the regulator when they get screwed. And so the regulator sits between this position that, how do we help people from not getting screwed? Well, maybe the way to do it is to not give them access. And that's a terrible idea, to be honest. But again, think about it from a dumb to smart rule kind of projection. That's a really dumb rule, but it works. I mean, if you can't get access, you're not going to get screwed, right?
Yep.
I mean, that is true. It also means you're not going to have any opportunity, which is terrible. But it's a dumb rule, so it's dumb. And we haven't really made it that much smarter over almost 100 years. And now, though, we are making some progress. So yeah, if we were to do a security offering, a bond, like a tokenized bond or debt, and we allow U.S. individuals into that without having the permission from the SEC, then we will get fined, potentially sanctioned, and potentially get closed down by the SEC for allowing in, trying to help grandma make a few dollars on her crypto investment.
Yep. And
again, that is our goal. But if helping grandma means we can't help all the other grandmas from everywhere else except the US, then we can't make that choice. So sometimes it looks like you're kind of part of this, like kind of almost like economic racism. But we're not. It's just that, we need to help as many people as we can. And to do that, sometimes we have to restrict access. But the goal is to help those governments understand that restricting access doesn't actually help. What it does is push people to even worse opportunities because they go in the black market. So I don't want to call it DEX a black market, but if you kind of look at how they operate right now, you kind of have centralized exchanges would be kind of the white market. They're approved, they're regulated, whatever. Not all, but some. And then you have the DEXs. So if somebody can't get into a centralized exchange that's regulated, does some vetting, et cetera, they end up going on the decentralized exchange with no vetting, that anybody can list anything, and they end up losing money because they don't know what they're doing. And they don't have the support of the centralized exchange because we can't onboard them because the government says that helps them not lose money, which again, doesn't really make any sense.
Man, dude, Kevin, thank you so much, buddy. Dude, this is probably gonna be one of the highest viewed interviews on my channel within a few months, man. This is good. This is such great info, man. I could keep going, but I know if I go over an hour on this one, it just won't perform as well on the channel, so no point. But whenever you get time, man, it's an honor. You're welcome back on the show anytime, man. And anytime you guys are launching any new Kadena projects, let me know.
Absolutely.
I'll definitely add a thing in the video for you guys, so I appreciate it, man.
I'm down for whenever you want to talk about something. You got a topic you want to talk about, you think I can talk about it, literally talk to Cody, add something in my calendar. We'll do it.
Let's do it, man. Thanks, Kevin. Have a great night, buddy.
Thanks, man. Cheers.
Thanks. Later. And I would greatly appreciate it if you guys could do me a huge favor and swing over to Twitter and hit that follow button and follow Coinmetro and show them some love. Tell them that I sent you and give Kevin a big shout out, man. This is awesome. Hopefully Kevin and Coinmetro team would like to come back on the show because I would love to learn so much more about exchanges and how they operate. And I'll just shut up before I kill the engagement on the channel. Love you guys. Peace.